As the business world begins the process of realignment in a post-Brexit Europe, the Bank of England is preparing the ground to undertake the necessary steps to assist where it can to ensure, as far as is possible, full support for the British economy. What this entails remains to be seen. We're now joined by Charles Dumas, Chief Economist at Lombard Street Research. Charles, welcome. Rates half of 1%. We've been there since 2009. The other thing that happened in 2009 was £375 billion of asset purchase money was available, and that still remains. What else can the Bank of England do, or indeed what should they do?
Well, in terms of sort of basic stimulus, there isn't much they can do, or for that matter, they should do, because the slowdown we're likely to have in the economy in the second quarter, anticipating what's happened, or just in case of what's happened, and in the third quarter because of what's happened, that slowdown is not going to be changed by moving interest rate from 0.5% to 0.25%. And it's not really an issue of liquidity. So the key thing the Bank of England has to do is to make sure that the banks themselves are not in any way caught short, and that there's plenty of liquidity just in terms of money markets, and there's no seize-up or Lehman type event, which certainly there doesn't need to be. If it comes to policy, I would have thought that the only sort of policy that one would look to in the relatively short term would be a degree of fiscal easing, as opposed to monetary steps.
Well, that's an interesting point, because the one thing we've heard from George Osborne, of course, fiercely an in-camper, he said that taxes will have to go up.
Yeah, well, that was drivel. Frankly, I think, speaking as someone who couldn't, with conviction, vote for either side, I think that both sides behaved appallingly during the campaign. Yeah. Osborne and Cameron making ludicrously exaggerated claims just as much as the sort of near racialism of the Brexit group.
Yeah. GDP out today. So final look at the first quarter. Who cares about the first quarter? I guess 2%, 2.1% growth, whatever. We're getting all sorts of expectations of where the economy is going in terms of GDP numbers. I don't know what your thoughts are, but anything ranging from sub 1%, 0.9%, I thought I saw recently from Deutsche Bank for 2017, to out-and-out recession, 2 quarters of negative growth. When that happens, if it happens, what effect that's going to have? What are your thoughts?
Well, I think that there will be probably, or could easily be, 2 quarters of negative growth in the second quarter, the one which is just ending. Yes, so it's last day today, and the third quarter, which is the one in which people react, and after that I would expect recovery, and frankly...
So regrouping as quick as that?
Well, yes, I mean, the economy is gaining quite a lot from the substantial devaluation of sterling, and there was, as you probably know, a very large current account deficit, which worried a lot of people. Not me so much, but a lot of people really worried about it. Well, you know, the volumes at least of trade are likely to be helped a little by the devaluation of sterling that's taken place, and so I would anticipate, frankly, that the economy will bottom out in the second half and grow during 2017.
Well, 133, I think, against the US dollar. Is that still the cross to watch, or we should be more concerned about what's happening with the pound against the euro for reasons that we are at the moment divorcing from the eurozone, or are you not too worried about that cross?
Well, first of all, the cross is very important, yes, but the euro has been pretty stable against the dollar. It's been between 107 and 113 to the dollar for a year or so now, and there's been a lot of talk about how it would go down further, but it hasn't, in spite of Mr. Draghi's efforts, because, as a matter of fact, the eurozone economy is quite strong, and it has a huge trade surplus, which means there's a constant inflow to euros. So if I had to bet, I'd say that it's more likely the euro is going to be strong than weak, and probably more likely strong than stable, in which case if we stay in the 133, 135 region against the dollar, then it will be going down slightly against the euro, which mildly helpful.
What other aspects of the British economy should we watch out for red flags that things are not all particularly good? And we've been monitoring inflation, which has been very anemic. Would you like to see a higher inflation number? Is this possible? Could we go into deflation? Is that going to have an effect, and the Bank of England bring them out with some?
Well, I don't think there's very much danger of deflation, and I don't regard deflation as a particularly bad thing anyway, since the deflation we've had in the last year or so has been an improvement of consumer incomes arising from cheaper oil and other energy and raw materials. So, you know, on the whole, I think deflation, at least so far, has been a good thing. But with the devaluation on this scale, you have to reckon that, if anything, you're going to get some imported inflation.
Yeah, imported goods become more expensive.
Yeah.
That then obviously pushes prices up. The other aspect of the British economy, of course, is house prices, very much based on an economy which seems to be over-levered, I think, to some degree. I don't know what your thoughts are on that. Is that a part of the economy that you're worried about?
Well, it would be a concern if there was a slump in house prices. A reduction of house prices in London would have quite a lot of beneficial effects, because you know, large quantities of people who work in London simply can't afford to buy, and there's a sort of generational issue there, which has come out again in this recent referendum. But you know, the other important thing in Britain is the South versus the North, and in particular London versus the North. And the big Brexit vote was in the North, and lower sterling will help them. And if the developments are rather negative from the London standpoint, then to some extent the economy will be rebalancing in what most people, I think, would regard as a good way.
Yeah, the point you mentioned, of course, is the fact that London is pretty much the engine house for growth, isn't it? Certainly at the moment. Do you worry about that? Is that something, I mean, you're part of the city, obviously you're talking from within, but do you worry about the way in which all the negotiations are going to be handled, and the fact that Europe doesn't want the UK to take certain parts of the business which it has previously had? Well,
it's got to be a concern, yeah. I mean, for the last several years, what's happened is that the extraordinary failure of the euro system, the euro area, has not only meant that our export markets are relatively depressed, but also has forced up sterling as all this money's come roaring in, and most of it's come to London. And of course the high sterling is detrimental to manufacturing, which is Midlands and the North. So that's been the North versus South problem, and it arises largely from what went on the continent. Now, to the extent that this is to some degree reversing, I think that has positive aspects, but it's equally true that a simple pullback of euro business, particularly to Frankfurt and Paris, is going to be, at least in the short term, detrimental to London's position. I've got to say that the way those guys run their affairs over there, and you know, the idea that you get people from A to B basically by making them click their heels and march, rather than hanging a carrot at B and hoping that people will end up in the right place, that is fundamentally inimical to financial market activity. So the business could easily start trickling back, as in the old days. But in the short run, and when I say the short run, we're talking about 2 or 3 years here, it has to be a negative aspect. So, you know, there are arrows pointing in different directions here. I'm sorry to be an on the one hand, on the other hand type of economist, but, you know, these factors are in different directions.
Okay, let's clear it all up then with one final question about the outlook. What should we be watching for as we go into the second half of the year, as we go into 2017? What do you think are going to be the significant events for the UK?
Well, the most significant thing, I suppose, in a way, is well, the two most significant things are firstly whether the US recovery continues and remains relatively strong, which we do expect, and secondly, what happens in Italy in the referendum there in October, because if Mr. Renzi finds himself in serious trouble with elections, then the difficulties have crossed the channel, as indeed I would have thought over time they're bound to. So I'm going to be looking out very much for the political developments on the continent.
And of course, by then, of course, we'll have a new president, so that could also be another thing as well. But Charles, thanks indeed for joining us there. Charles Dumas from Lombard Street Research.